going on? Hope you guys are doing well. So just normal Backtesting Q&A session today. Will be recorded and posted on YouTube later today. So if you want to go back and watch it, or if anyone missed it, it will be provided. We'll also do another backtesting session later this week. Today we're just going to go over really the trade review from today, and then some time-based stuff for true kill zones, which was what was the plan for this weekend. And we're just looking at time profiles and things like that, volatility injections, and how to use time within specifically the New York kill zone. So we'll go ahead and start the trade review today, and we'll work into the rest of the stuff. And if you got any questions, then feel free to post it in the chat as normally. Can review those, but we'll just go through this. It'll be a little bit shorter today. Probably won't go over an hour, since it's a little bit later at night. So anyways, we'll go top down. So we're kind of in this consolidation period from today. We opened up, I don't know if you can see it. Anyways, opened up on the 1 minute chart. We had this nice consolidation forming. Don't know why it's not. Let me go back to the hourly chart. Opened up. Within the hourly is not a whole lot, since there's pretty decent consolidation. So we're going to drop to our 15, and we're looking for obviously the 4 profiles that was discussed in the New York, how to trade the New York ERL to IRL. And your 4 different profiles are going to be either discount to buy side, remove this, buy side to discount, or premium to sell side and sell side to premium. And those are the 4 things you're going to be looking for a profile. And then obviously using time and price considerations to find setups using the ATM model preferably. So 15-minute candle closure with SMT, 15-minute sweep or fair value gap with SMT, 5-minute candle closure, 1-minute market maker model with time. So if we look for that today, go back to the 5 to the 1, but right at 9 o'clock, 8:45-ish, we are purging, skip forward, there we go. We are purging London high, which is a form of buy side liquidity, right? So we're going to be looking for a discount. Well, if we take our most current dealing range, you can go from this low to high, or even from this current dealing range low to high. We have this first fair value gap in discount. So external range to internal range, and this external is time-based. So we're going to be using most times when we're targeting an important pool of liquidity. It's always going to be a time-based session pool. So session high or low, or our higher time frame high or low, obviously formed on the daily or the hourly, something like that. So we have our external now to internal. Drop down to our 1-minute chart. I was anticipating this morning at 9:26. If you saw the stream recording, it was posted in YouTube vids. I'll send the link right here. You can go back and watch that. But as we had this original consolidation here at 9:26, if we're reaching for internal range down here, what do we expect to see? Well, you can think power of 3 at 9:30. So open, right? High, low, reaching to our target, and then close as a retracement back into 20 to 30% of the range most times. Now, as we approach 9:30, we don't get the Judah swing. Okay, we just start trending and trading lower into 9:30. So what am I anticipating this to be? Well, if we tag the internal range at 9:30 or within that first 15 minutes, then I'm looking for internal range again to external. So what can we use as external range? Well, we have this PM session high from Friday. That's a nice external range target in the form of time-based liquidity. And we have this pretty clear original consolidation buy setup here. And if you're in the private group, this is all posted beforehand. And even if you're not, you can go to the wins and losses from today, and you can see a bunch of people all taking the same trade outlined by this very specific model. And this is not, there was no stream today. So all those examples are from everyone's own doing on demo, of course, but it proves that this stuff works. So as we reach down into this IRL with the first 15 minutes, what are we then looking at that as? Well, as a Judas swing, we need to see SMT. So as we reach further down, we obviously take out that sell side, but more importantly, we dig into a 15-minute fair value gap over here. So we're taking out session liquidity pools, but we're also digging into fair value gap. So what do we want to see if this is a discount fair value gap? Right, we reach into discount. What do you want to see in the form of a discount fair value? Where we're going to go to buy side again. So go back to your 1-minute chart. We had SMT. If I skip forward more, SMT between the London low here. I'll go back to ES. It won't be in replay mode, but you'll see exactly what I'm talking about. Here's 930. No SMT at all. No sweep on London low at all. So we had the pretty clear SMT there, which is what you want to see. Go back to NASDAQ really quickly. Of course, remove the replay mode, but sweeps it. We have a nice up 2 closing candles here, which I was anticipating to be a breaker. As we climb above that, you can see the first 5-minute candle then does print bullish here at 940, even the 945 candle printing bullish. So that now qualifies us to look down to the 1-minute chart, looking for a fair value gap entry, obviously using time, which most times is going to be your 950 macro. So we dip into that fair value gap here, trades off, gain a nice 20 points, and then reaching up for that buy side randomly within the kill zone as well. And then we consolidate and then start trading lower. I'd actually preferred it to ran all the way up into PM session high, but as it's a Monday and we don't have news tomorrow either, we can expect a high amount of precision, right? But nice move even from here. If you got in here, exit there, 90 points. That's your whole week's worth, to be honest. And here's the demo execution from today. Entered right there, intermediate term low. As soon as I ran that fair value gap, and then I was holding it for the buy side, trailing stop a little bit too tight, so we got stopped out there. But still, within the first 3-4 minutes, nets, where's the entry here? Nets 25 points, which is your minimums. Minimums within 3 minutes, and you could be done. So when you're going from top down, 1 hour, find your draw. 15-minute, find the ERLs, find the IRLs. Where are we trading at right now? Are we trading a premium? Are we trading in discount? Are we sweeping buy side? Are we sweeping sell side? Just based on that knowledge alone, you can figure out where's the next draw and how are we going to get there. Well, if our draw is lower, we want to see a Judas swing up. And it's going to be the same framework every day. So when you get this indication that there's not going to be a Judas swing above us, either one, it's going to run to your target quickly. You can get in on this fair value gap here where we are targeting London low, and it provides an IRL to ERL run. Or you just wait. We just wait for another entry. You have multiple opportunities in here. Order block being used as the second stage of distribution. So this breaker, as you trade above it and create a order block that taps into the breaker, this becomes a high probability order block, especially when we fill a gap. And most times as we react off that, that's going to create your second stage of distribution, obviously within silver bullet hour 2, as you reach up into there. And this is also where ICT executed today. Let's see if I can find the picture. Here we go. Here's ICT's execution. Obviously better than ours, but entered later. Got in right there with that fair value gap and then targeting the buy side liquidity. So pretty solid stuff today. I also wanted to cover the time-based stuff. So if you're in the private group, go to the Q&A section and then go to the to test little subcategory. We're going to be covering 10 a.m. news today. So the question was basically, does 10 a.m. days where we have 10 a.m. news follow the 8:30 time profile? So on a normal day where we don't have 8:30 news, the kill zone does start at 8:30 and closes at 11. But we can narrow our focus most times between 9:20 and 10:30 is our kind of our sweet spot for non-red folder news days. Now, when we have 8:30 news, you're going to be shifting your focus mostly to 8:30 to around 10:10. Even you can narrow that even more to 9:20 to 10:10. A lot of times you're high probability setups are going to finish by around 10 o'clock. It can trade into 11. Then if you go to Friday, nice sell side liquidity run into premium, right? We took out London low, took out Asian low, SMT there, right at 8:30. And then the trade setup, which was reviewed on stream. Nice value gap there within a random time. We see the breaker as well. Breaker in there. And then we reach up into a premium for value gap, trade into the rest of the day with this large run lower setting up on Thursday. So if you go back to the days where we had 10 a.m. news, I'm going to pull up the Notion. We can go over that quickly. And you look at the time setups, because a lot of times when you're looking at 10 a.m. news, you may just start at 9:30, and it's going to be a little more difficult as you go into Silver Bullet hour. So let me stop streaming here. Start streaming the Notion. So you may have to click off and click back on. Let me change the stream recording as well. So if you go into all these setups, we'll look at basically, if you think about volatility as gas in an engine, all right? When that gas is poured in, or whenever you start the engine, it's going to run out of gas eventually, and you're going to have to refill it. There's going to be a refilling period, and the refilling is basically building up liquidity for then the algorithm to then function on, obviously, whatever side it builds up more on, or it doesn't really matter. But anyways, at 9:30, that gas is going to be poured in and the engine is going to start. Normally it runs out by 11, and between 11 and 12, kind of that reset period, and then lunch will run stops again. At 8:30 news days, you have the engine start at 8:30. It runs on liquidity till around 10 o'clock. Sometimes the first 30 minutes of the Silver Bullet hour is a little bit rough. And then later on to Silver Bullet hour, 10:30-ish, maybe going to 11, you can get another scalping opportunity. I don't have a link for this Notion. This is my own personal Notion. But I do encourage you to just take notes on everyday price action. So if we go to a random day, the way I take notes personally is I categorize them. You don't need an MMXM profile. This is not needed. But news, make sure you have that typed out. Type, I just have ERL to IRL or IRL to ERL. And then day of week. And then the way I'm taking notes is just screenshotting. I don't have the daily chart as a bias or 4-hour chart. I like to just use the 1 hour, 15, 5, and 1. But on the way down, I'm annotating anything that seems important to me. And then just working my way down into lower time frames, annotating even more and more with timestamps, which helps me delineate the best setups. So all these little timestamps are best setups, and you can, a lot of times when you start doing this, you'll find patterns that repeat over and over and over again. This is how you get really good at reading price action as it prints in front of you. So if I can click off here, there we go. And then you can start learning these profiles and things like that, and building your own. But going back to the main topic, look at all these days, and where does the volatility actually kick in? Yeah, it's going to be 9:30 most times, but we look at 8:30, you can find pretty solid setups going into 9:30 to finish out an MMXM. And you can see this first 30-minute window in the Silver Bullet hour is poor, which is common on 8:30 news days. So when we have 10 a.m. news, you're going to be most likely utilizing your 8:30 time frame, like little mini kill zones. So between 8:30 and 10, if you want to use that, and then after 10:30, you'll find good setups. You can either use, 850 macro. That's an opportunity. You can use the 9:30 volatility to get in, or you can use 950 macro. You kind of want to mostly skip out sometimes between here and here. It just comes down to what the price action is showing. But if we look at all these days, also notice that a lot of times when we have just 10 a.m. news, and if it's pre 8:30, meaning if today's Thursday and we have 8:30 news on Friday, any day, regardless of 10 a.m. news, that's before an 8:30 news day is going to be more difficult than others. Most times, not all the time, but most times it's going to create more difficult settings. But even on 10 a.m. news days, it also can be a little difficult. But if you go back to the pictures here, same thing in here, right? So we have 8:30 starts the kill zone, pretty nice market maker sell model in here, completing at 9:30, and you have not window of opportunity within the kills with the macro here. And then the first 30 minutes after the 10 a.m. news hits, you can see you could scalp short in here. It's a little bit more difficult within this range. You have a deep retracement here, which would be probably a more difficult entry. May actually stop you out if you're going long within this gap or this gap. But you look at after 10:30, nice short setup materializing with the fair value gap here. You also have this kill zone lining up too, with another fair value gap right in here. A wicked IO fed trade lower into the sell side. I mean, keep going through these examples, but you'll see a lot of times that you're trading 10 a.m. news, you can just start your kill zone a little bit earlier. Here, same thing. See if I can find it. Here you go. So the decline here starts at 8:30. You have an opportunity, trades up into a bearish order block, probably for value gap entry in here somewhere on the 2-minute, trades lower, and then into 9:30, you have SMT as it fills a fair value gap on ES. I don't know if I have a picture here. There you go, perfect. ES for value gap, 15-minute with SMT, so we can use a value gap here. I don't know if I have the ES 1-minute chart. Oh, I do, perfect. For value gap in here, short that, or as we trade back up into premium of this dealing range, with the bearish breaker for value gap, short that as well. But you can see first 30 minutes, even going to silver bullet hour, it becomes pretty rough, choppy price action you don't want to be trading. So why does the volatility run out right at maybe 10:10? Because on a 10 a.m. news day, you're going to be starting earlier. That's when that engine is going to start. It's going to spool for. Algorithm's going to use any news it sees to spool price action in a specific direction. It's most likely going to use 8:30 as a start. Here's another example here. 8:30. Nice short setup within the macro, reaching down for, we have pretty substantial SMT there actually, but reaching down for the lows into a discount for value gap, and then we reach for buy side going to the rest of the morning. And you can see at 9:30, there's no Judas swing. We don't ever create really a Judas swing at 9:30, just continues up. And that's because we start looking here, and you can use either 9:30 as a completion of the market maker model or starting a new one. And that's why also you have the context of using this macro in here as a continuation entry, since you don't need to see a Judas swing, since this is where you use your true open. Okay. If this is confusing, don't worry about it too much. Same thing in here. This is a Monday, but nice short opportunity. This is a rare occurrence. It was also a Monday. So as we get this Judas swing up, takes a London high, we're going to be reaching for discount IRL. So this is why it's important to take screenshots of your stuff every day, whether it's trade recaps or even if you don't take a trade, or if you do take a trade. My suggestion to you would be completely remove everything from your charts. So make sure it's just blank clean. Maybe if you have a couple time-based indicators, that's fine. But remove everything. Like my analysis for today, as I go and I'm going to completely remove all my annotations from this morning. Okay, I have it all recorded, so I'm not worried about losing any thought process that I had. So now when I go in later in the day, either the next day or preferably the current day, you get a full, fresh look at the market with the benefit of hindsight. A lot of times hindsight isn't good because obviously you know the answer to your puzzle before you're even given it. But if you experience it both live, and then you can go back and look at exactly how the market delivered and use the benefit of hindsight to basically correct your thinking from the previous day or from the previous hour, kill zone, whatever. That'll reinforce good habits and good learning habits as well, right? So not reviewing your trades and not reviewing the day is going to drastically decrease your learning speed and what you actually can take home by the end of the day. Yeah, it's nice to say read live, you learn the real skill, but then going back and seeing, okay, what time is the best entry? How can I perfect the best entry? Like, why did it dip down here? Like, I got stopped out here because I was not respecting the repeating rates as I was trading lower. I should have kept my stop there. I trimmed it from, I think, here to here, targeting this buy side still. And then I trimmed it again to here. and I shouldn't have. Because with this fair value gap, this bullish order block, which should have just supported price altogether, and I knew this was an intermediate term low. Obviously, still gave 20 points, and I took partials on a different screen. But you could look at, okay, when did this continuation entry happen? Why did this happen here? And where did ICT get in? Where was the preferred terminus? At what time did it happen at 10:33? Was there anything else later in the day? I suggest just looking at one kill zone, and preferably it's going to be the New York kill zone because you're going to find high quality setups there basically every day. And you also know that every day, every AM session is going to have a market maker model. It can start at different times, it can finish at different times, but every day there's going to be a market maker model. And that liquidity or imbalance can be formed within the kill zone, or it can be completing what London did. So in here, yeah, you have a market maker sell model. You could trade that side, or you could trade the market maker buy model on this side. Go back to Friday. What market maker model is completing here? Well, we have two it's completing. You have the market maker sell model completing from London session, and the market maker buy model here starting at 9:30. Target up here, or you could target the higher time frame gap that we had, which was posted there and all happening within the kill zone. You could go back to Thursday. What's the market maker model in there? Well, we complete one at 8:30 and then create a second one, market maker sell model here. And these things happen over and over. You can see my annotations actually from a Thursday review. SMT, keep it simple. Don't over annotate your charts. I'm marking out the very basic stuff. That's all you need. SMT, ERL to then IRL and discount. That's what this gap is here. I'm marking out key times, 8:30, 9:30, 10, 11. Sometimes I mark out 10:30 as well. And then any sibi or bisi that was given as an entry point market structure shift, things like that. There's a breaker right there too. Time of entry, time of exit, another time of entry. And this is where you get really, really good. So if you're neglecting this part, you're neglecting a huge part where you could be improving. And when I started this back in January, just actually labeling everything and keeping track of every single day, not just macros, not just one setup or just a little zoomed in picture of the 1 minute chart. You don't want to just go in and do this. This is not going to help you. Okay, so if you're taking pictures of this and that's your whole screenshot, this is not going to help you. Yeah, you can see, okay, we respect this for value. If you want to do a case study on for value gaps or something, this is going to be important. But you're not getting the bigger picture of what is price doing. And you know the only two things it's going to do is reach for liquidity or reach for an imbalance. And then you can start framing it. Which imbalance is it going to go to? Which liquidity pool is it going to go to? Where is it coming from? And all those, once you find the draw every morning, the entry part is the easy part. All you got to do is just wait for the same stuff. You wait for a Judas swing, you wait for a market structure shift, 2022 stuff. But a lot of times, and me included, early on, I was so focused with where's the entry? When is the entry? How do I get in? How do I get out? And that should be really the least of your concern when you're studying it. And also when you want to improve. Don't focus on where was the best entry. Focus on first, where is it drawing to? And when is it getting there? And how is it getting there? Once you understand that bare bone basic stuff, there's no secret ingredient to it. By the way, you can't find anything on Twitter. You can't find anything on YouTube. If someone says this is the secret, they're lying to you, because the secret is just where's the draw and how are we going to get there at a specific time. It all comes down to the basic stuff that I told you in the beginning, but you refuse to believe it's that easy and put in the work towards it because you think there's some magic PD array that'll take you there. When in reality, it just comes down to draw and risk management. Entries, it really just becomes easy after that, especially when you know what you're looking for. And building a model off that too. Like if you have a very mechanical model, you're looking for this, then this, then this, and I enter here, stop here, take profit here. It's so much easier. But if you're neglecting the part of what's my higher time frame analysis, if you're pulling up to the chart with this 1 minute and you're staring at this, it's not going to do you any justice, especially if you start looking as soon as your kill zone starts. If you're coming to the chart and maybe your kill zone or your time of interest for the day is between 9:30 and 10:30 for whatever reason, right? If you're living on the East Coast, you wake up right at 9:30, you get to the charts to be 9:35, a little late, and you're scrambling to find all these things, you're not doing yourself any favors. You think, oh, I'm getting this extra amount of sleep, but then you're not going to execute the way you want to execute. I would suggest if you want to start at 9:30, you wake up and you get to the charts by 9 o'clock. You want to give yourself at least 30 minutes where you can stay disciplined in that time where you know, okay, I'm not going to take any trades because I'm missing the first element, which is time. Okay. I'm not going to touch the charts. I have 30 minutes to just sit there and develop my bias, and I have time. The volatility is going to kick in at 9:30. I have time to just figure out what I'm looking for and what I want to happen. And it also kind of brings peace of mind because you're not just jumping to the charts and you feel rushed. It's better to just come at least 15 minutes early, take your time, sit down, work top down. You got multiple different charts looking at different things, right? If you want, I've got a whole separate chart just looking for higher time frame bias, where a lot of times all my annotations here are not going to go over to my other one. I also have a separate screen on my left side where I'm looking at just ES, NASDAQ on the 15-minute chart, so I can look for SMT. I have a whole just tiny little portion dedicated to SMT. So make it easier on yourself by not adding the amount of stress, because if you're under stress and you take a loss, it's going to be even harder for you mentally to think it's not an emergency when that adrenaline is pumping, right? You got to stay calm and collected, look for exactly what you're looking for, execute to your system. And then when you take a loss, after you've had a market structure shift, after you've had SMT, after you have all those things in place, you take a loss, it's not going to feel, it sounds like I would be even more mad. But in reality, when you execute to your plan the way you wrote it out, and then you take a loss, it feels way better because you know, okay, I've seen this model play out so many times, and now it provides me a loss. I'm fine with that. I can walk away because I know the same exact thing is going to happen tomorrow. The problem is then when you feel FOMO'd. When you feel FOMO, say you had a bias that was bullish, and then boom, it starts trending lower, and you get to 9:39. You think, okay, what if it keeps going lower? What if I missed my move? What if this was the Judas swing up here, and I missed my entry point? And you FOMO in, and you get in there, and you take a loss. Trades back up, knocks you out. Then you're thinking, why did I enter there? I need to get it back because I made a stupid mistake. When the first mistake you made was even clicking the button out of your model. And when you execute outside your model, you're going to revenge trade more. You're going to make more stupid decisions. It kind of spirals lower. So if you can just stay patient and wait for the same exact setup to happen every day, you learn, first of all, to trust the model. And then you learn that the discipline aspect is way easier than you think it is when you just listen to the advice that your past self gave you. Okay, don't over leverage, don't over trade, and just stick to the model, both with price. So have a price model, meaning this is what I'm looking for in price, and then also have a time model, which means not just down here, not just the x-axis, although that's a big part of it. Time model meaning look at these same time frames every day. For me, I've got 4 time frames. I've got the hourly, the 15-minute, the 5-minute, and the 1-minute. That's like the ones I'm most comfortable with. I've been tape reading this 1-minute chart for I don't know how long now, probably a year, a little bit more than a year, I would say. So this is where I'm comfortable tape reading. For other people, this is not going to be where they're comfortable because it's just a lot of data and you can get very confused with flipping bias. But that's why it's important to have higher time frame charts. In reality, you probably only need 3: higher time frame, intermediate time frame, lower time frame. That's like your main stuff. But use those same time frames at the same kill zone time, and you see the patterns that repeat over and over and over again. And it becomes so much easier because you're looking for the same things. And you don't have to complicate it. Stop thinking that you need some magic thing or some model that's going to fit every day, because in reality, there's not going to be a model that fits you every day. You can get close to it by using simple stuff like discount to buy side or buy side to discount, sell side to premium, premium to sell side. That's your framework. And then finding lower time frame scalps, you can do that. Or if you want larger moves, you may have to wait for high probability days. So wait for days where you have news. Don't trade something like a Monday. And you want to wait for your exact setup. Flux, do you think you expect that heavy? Do you expected that heavy drop on Thursday? I think that's what the question is. No, I did not. I wasn't assuming we were going to get that large move on Thursday. And to be honest, in reality, I simply don't care. Like, this is a PM session move. Is it going to affect my trading? No. I'm going to instead just use it as a target. So for me, and this comes with experience as well, you learn that any move outside of your model and outside of your time zone is just noise to you, right? Like, would you come to the chart and you look, maybe you come in and look at New York session. Do you come and look at Asian session and then start thinking, oh, I missed that move. I could have been trading there at 8 p.m. or 9:30 p.m. I missed that. No. Do you come to London or do you come to New York and look back at London? Oh, there was a setup there. I could have taken that. No, you just use it as data to then go in during your time zone and get in. So something like this large move I was not expecting, but it also, I don't feel like I missed out on this. Yeah, it was a 300-point move, 500-point move. You could have thought, oh yeah, I could have shorted that, got in there. But you don't need that stuff. You need 20 points every day. If you can get 20 points every day, you'll be that's more than enough. 50 points a week is more than enough. So don't think you need to get large moves every day. You need to scalp literally 20 points. You need this much movement from here to here. That's all you need. A tiny little, it's like one candle. If you can predict 1 or 2 candles out of a larger move as your whole that's your whole week's worth. If you were to catch this move from here to here, realistically, you actually could have just been done for the entire week off one setup. But it also just comes with knowing when your setup's going to form. So we know, okay, economic calendar shows today we have, let me pull it up really quick. Economic calendar today shows that we have 8:30 news on Wednesday, 8:30 news on Thursday, 10 a.m. news on Friday. So if you were to prefer trading on the highest probability days, you would look at these 3. You don't care about these 2, right? And you know, okay, Wednesday we have 8:30 news, CPI. There's a high chance that between 9 o'clock and 10 o'clock, I can find a setup just targeting our standard draw on liquidity, giving me 20 points. I don't care where that draw is. I know when it's going to happen. I know that my model is going to be there here. My model is going to be there here. My model is going to be there here. So any trading that happens on Tuesday, if I don't show up, I don't wake up, whatever, I got something to take care of. I'm not stressed about missing moves because the move's going to be there here. It's going to be here. Realistically, there's a model every day. And I've proved that to you with the ATM model videos and executions and live streams and things like that, just looking for simple stuff. So yeah, you can find a move every day. Does that mean you have to trade every day? Does that mean you have to be in every single move? No. And training your mind to think about that will make you better in the long run because ICT mentioned this in the 2022 model, the mentorship. If you can look at London session and think, okay, there's a trade setup in there. There's a nice short. You could have taken out that London low. I'm glad I could see that. And I didn't trade it. And you know that you have the power to get in there, the power to get out. And that's the same stuff happens every day and you choose not to. That gives you so much more comfort than scrambling to look for a move and thinking, what if I miss it? Because then you know if I miss this, it'll be there tomorrow. If I take a loss here, it'll be there tomorrow. It's not that you're quitting. If you take a loss or take 2 losses in a kill zone and you decide to stop trading, you're not losing to the market. You just are either not on your top of your game or you need to recoup and refresh your mental capital. So then tomorrow you can make it all back or you take it bite by bite. Obviously you don't have to make it all back, but there's so many different psychology things that the problem is when you start with live money or when you start trading and you think you can do it all in the beginning, it then reinforces bad habits later on. So the way you fix that is by completely just changing the way you think about really how you think about the markets and how you think about setups and actually just doing it. And that may mean just sitting down for a week or a month and not even touching the demo button, just sitting there tape reading for 30 minutes, finding the same stuff you're looking for, knowing, okay, I could have taken that. It could have netted me 30 points, but did I take it? No. So when you come to the chart the next week, you know, if I push the button and I take a loss, am I upset about it? No. Why should I be? The model's going to be there tomorrow, and I probably can execute better on that day for XYZ reasons. So I guess I'm going on a little bit of a psychology rant there, but I covered majority of what I want to talk about, just trade setup from today and the kill zone shift. So that's all included in the New York PDF. I think it's posted in the notes chat. So narrowing down the kill zone, you don't have to look between 8:30 and 11 or 8:30 and 12. Don't think you have to look between this. If you can narrow it down even more, that'll be beneficial to you for your mental capital. And just in life, you don't want to be, if you could work less and make the same amount, why not? So the first thing I would say, if you want to take anything away from this backtesting stream, is first of all, journal. If you're tape reading in the morning, journal the same exact stuff, the same kill zone later in the day. Take screenshots of higher time frame all the way down to lower time frame, and annotate anything in between. That's where you really, really start getting good at finding your model. And if you want to develop something, that's how you do it. You don't develop it by reading it live. There's too much, most of the time there's too much focus and stress to then be looking and trying to use different things. That's not backtesting. Backtesting is when you go into old data and you find moves or you find clarification for things that should support your original framework. It's a little bit harder. Replay mode is forward testing. So if you're going into replay mode and watching the candles print and entering whatever, that's all forward testing. Backtesting comes with screenshotting everything, annotating it, both the time and the price stuff. So this is a price annotation, something like this, 950. This would be a time annotation. Okay. So first takeaway is just do something like this every day if you can. It takes no more than 10 minutes, and store it in some way where you can go back on a calendar view. It could be just a standard Google Calendar, or Notion's pretty solid as well. And then second would just be, if you can develop a model and focus on that and stick to it very well for a couple weeks, a lot of the psychology limits that are holding you back will be completely removed, just because now you have a model that you know repeats, you know appears at a specific time on a specific day, and you don't have to push more than that, because if it can give you 50 points in one day, that's your whole week's worth. Right? Because 50 points on NASDAQ on the demo, right? NASDAQ, 2 contracts, 50 points, that's a good 2K. Multiply that by 52 weeks. That's a nice salary, I would say, in the US or even most parts of the world. So first of all, lower your expectations. You don't need to get 50-point runs every day. You need 20 points a day, but even that is pushing it. 50 points a week. You need 2 good setups per week or 1 solid setup. And you know there's 8:30 news most weeks, 1 time, right? And you know that the 8:30 news day is high probability. So if you can find 1 8:30 news day in a week and look between 8:30 and 11, find a textbook market maker model setup or a 2022 setup that'll net you 50 points. There you go. Don't gotta work the rest of the week. So don't push it. And if you know something is low probability, I promise you, if you just avoid those days or just tape read those days with no button pushing, and save your mental capital for later in the week, you'll see so much more improvement. Don't try and force something that's not there. If the market is showing you something else, why are you trying to fade what's the data that's giving you? Right? If we didn't have a Judas swing up here, are we freaking out that our bias is wrong? No, we just flip it. Now, that doesn't mean you just flip it on the 1 minute. You got to do top down. But we're allowing for the market to be right, and we have to just change our view on it. Right now, this is the Judas swing. Can get in there and change bias. Journaling and annotating charts definitely has increased my confidence to enter trades. Yeah, for sure. I 100% agree. And if you're not doing it, you're missing out. Even just for 2 weeks, if for 2 weeks you can take pictures of one session every day, make sure you're marking out the news profile, marking out where does the setup occur, what time does the setup occur. You'll see the same patterns. And for me, like, that's where I was able to develop a very rigid model, which is dubbed the ETM model. But 15-minute, 5-minute, 1-minute, I'm looking for all that stuff. And realistically, not everyone's going to use that. It may not fit your personality, it may not fit your risk profile, time, whatever. But that's rather than you go in, find what you're looking for to happen. Maybe you're just comfortable looking at the 5-minute chart. You don't like this 1-minute stuff. You just look at the 5-minute. I'm looking for an order block at the 5-minute to go long off of. Okay, well, here's your setup right here. 5-10, you have a bullish order block. Another bullish order block here. You can go long on that. I don't know. It could be anything. It could be maybe you're really good at turtle soup. You have so many different opportunities to get in on so many different time frames and kill zones where not finding a setup should be the least of your concern. That also means not trading in a day is also the least of your concern. So missing something like a Monday or losing on a Monday is not a big deal. And you have to train your brain to think like that. That comes with actually just journaling as well, just writing down, this is what I felt within the trade. This is how I felt after. How can I fix it? How can I fix my mentality for tomorrow so I don't make the same mistake or don't think a certain way, which will lead me into taking another loss. How long have we been going here for? 41 minutes. So probably just wrap it up there. It will be posted on YouTube. I'll host another real backtesting stream, probably like 2 hours or so, sometime over the weekend or on Friday. I'll make sure to actually ping that one out. We'll have a poll for the tier 2 guys or any Patreon guys. That'll be posted later in the week. So expect one of those sometime this week or on the weekend. If I don't see you the rest of the week, have a great and safe Tuesday. And we'll talk, and I'll see you guys soon. Peace.